Degrees here this morning, KWRD 1470, 98.5. All right, as we do on Friday mornings, George McFarland, Seven Waters Advisors in the house. What are we talking about this morning?
Morning, Mark.
Good morning, sir.
Talking about that cooler weather this morning, my wife was born and bred in Texas. She's already complaining about this temperature being too cold.
Oh, that's all right. Tomorrow's another day. or next hour is another hour.
Yeah.
So it'll change.
Well, not only is the weather cooling, interest rates are cooling some finally, right?
I'm thinking, sometimes I pay attention to this stuff. Sometimes I get just kind of oblivious to it all. But, when the election is coming up, it's amazing how things all of a sudden start happening.
Easing up financially, right?
Yeah.
Right.
Yeah.
It's very possible that your conjecture is on the spot that those interest rates may pop right back up after the election. We hope that they don't. It would be nice to see some lower interest rates, but the claim is that they plan on lowering at least a couple more times before the first of the year. And so that begs the question, what are people supposed to do now? Is it time to refinance? Have you been holding off on buying a home? Do you run and grab it or a car? What about CDs or other interest-based investments? What does that mean for you, right? That's right. The question going around at this point.
Because, in all honesty, and it doesn't matter who's in charge of what at any time, but when it is election time, whatever you seem to be enjoying now and will enjoy for the next couple of months, chances are it's not going to last. So, do you jump now, or do you hold off and wait a little bit?
That's a great question. And first of all, I'm never a big fan of orchestrating your life around the election, right? Yes, things will temporarily go up or down. Things will change temporarily. So having a plan in place that you stick to, that accommodates for things like changing economies, interest rates, things like that. That being said, interest rates haven't lowered a lot. We're talking about 0.5%. I don't know if we're even going to get down to a full percent drop moving forward. So when should you really jump on those types of things, like you said? As far as your refinancing, the general rule of thumb is unless it's saving you at least 1 full percentage of interest on your mortgage, it's probably not even worth looking at, because when you refinance, there's all sorts of new closing costs and fees that are associated with it. So if you immediately refinance just because we had a little bit of a dip, it may not make sense for you. So take what payments you have left till the end of your contract, and how much is that going to cost you, and compare that with how much it would cost you to make payments, including any additional down payment you may make till the end of that contract. Where are you in enough better shape to make it worth your time to do so? Yeah. So probably at this point, it doesn't make sense to refinance. But, if you've been waiting for the interest just drop a little bit to get a house, and it's time, and it still makes financial sense to get a house. But is it necessarily like interest rates should be the reason you buy right now? By no means. It's not enough of a change. I don't know if it'll be enough of a change for a while. And make a good point. Those interest rates can pop right back up after the first of the year.
Yeah. All right. Very good. Have I totally gotten you off topic, or was that?
No, that was actually right along the side of it. Right. I mean, that's a huge part of what happens at times. It does seem that inflation numbers overall have lowered enough for them to justify lowering interest rates, because they are still wanting to stimulate the economy some by getting people to spend. We have a very volatile economy, Mark, and everything's volatile at this point. Your balanced portfolio isn't really balanced anymore. Bonds are volatile, stocks are volatile. So I would say there's actually an opportunity before interest rates lower anymore to lock in maybe some of these better secured rates. So CDs, I prefer a MYGA to a CD. So a MYGA is basically an insurance-based CD. So it's usually a point or two higher than a CD, and it has a bit more liquidity. If you put your money into a CD, you can't pull a dime of it out without running into fees and charges and basically losing the gains you have in it. But a multi-year guaranteed annuity or a MIGA, it works just like a CD, but you can pull out up to 10% per year. And right now they're still having rates that are, 5.5% to 6%. So if you're worried about those interest rates falling on your CDs or on any of your other secured rates, your high yield savings accounts, you can go ahead and lock in those, because if the interest does continue to fall afterwards, we probably may not see these high of interest rates again, and you'll be stuck using some lower return secure side of your portfolio. So I would, at this point, if you like CDs or you like a secure sort of secure sort of investment, then I would look at a MIGA. Now, anytime you talk about these things, CDs, MIGAs, bank accounts, those shouldn't be the full brunt of they shouldn't be where everything is for your money, because you still want some growth. Any of these products that are secure, they're going to be right at or just above inflation. But again, you'll be in good shape if you can lock those in. So another thing about those MIGAs is that they actually are able to carry much longer terms. So, they could be as long as 10 years. So if we don't see these interest rates again for another 10 years, you can actually still have those higher rates locked in, making a better balance for your portfolio.
Do you have seen folks, perhaps have clients that, you come into a little extra money, whether you worked hard for it and earned it, or if it just it happened and it was gifted to you, or whatever the case may be.
Or you wore a Nixon mask and told everybody to get on their feet.
Something, but all of a sudden you have some money that you weren't expecting.
Right.
Sometimes are there folks that need to put it in either a CD or some other type account that you would advise them to where they can't touch it, because if they do, they're gonna mess it up.
Okay.
Put it somewhere where you know it's there, but you can't get to it until years down the road.
Yes, sir. And by the way, this is a perfect time to remind you guys, this is just for educational purposes. I'm not making any specific recommendations or advice for products.
Sure you are. I am.
Yeah, so if you feel like you do have trouble with self-control, or just something like a term policy like a CD, like an annuity, can do that. Maybe sometimes, and it just depends how much discipline you need. There are companies that are literally out there that literally help you spend your money. In other words, you give them accountability. They give you an allowance every month. So a cheap way to do, of course, would be something like a CD or an annuity. There are annuities that give you a guaranteed income for a set period of time. And so those are possible. In general, you may also want to consider other means as well, such as looking to why you can't control yourself on spending, maybe looking at counseling and stuff like that. Because if you're not restricted to singular products that limit you, you'll have more flexibility for planning. So, but short answer, yeah, there's definitely tools out there that you can use to either throttle your spending, or maybe the spending of if you have a college student, the spending of a college student, if you've been saving up college funds for them, or maybe you're concerned when you pass away, your spouse doesn't have a lot of discipline with their financial situation, so you want to help them by creating some sort of a guaranteed payout instead of a all access fund.
I just know there are folks that, I'm sure I'm probably one of them. If you got something, can't take it with you, so by golly, I'm going to spend it.
Right.
I need to spend it.
Right.
And sometimes I don't need to spend it. I need to hang on to it.
Absolutely. But So interest rates are falling. I don't know if it's that big of a boon to people that are trying to get a big mortgage. I don't think it's time for refinancing yet. You got to see some more drop in the economy. In interest rates. But for those of you who like interest-based products, bonds, CDs, annuities, and high yield savings accounts are temporary. But anything that is a time deposit type of security, kind of your last chance to get something like that to lock in higher interest rates for a while. So if you want some help figuring some of that out, 903-730-6688 or 7watersadvisors.com.
All right. And Sunday morning, 8:30, topic is?
Well, we're going to be talking about how do you manage your budget in a time where there's all sorts of different gig jobs that a lot of people are doing, whether you're driving an Uber, maybe you're waiting tables. I used to do balloon twisting. I'd sit on the side of the road and twist up balloons or go to...
That was you.
That was me. That was
Oh.
me, yeah. Did you like the hat I made you that day?
Well, and then you came over and you washed my windshield. It's amazing what you can do in the rain.
That's it.
Yeah.
That's it. And I stood in front of you until you paid me my tip. That's right. You got it.
There you go.
But how do you manage a budget whenever you don't know exactly how much money you're getting every week? And we talk about how to set a budget for an unstable income.
Wow, and you're going to do all that in a minute?
Well, we're going to give some basic thoughts, and as usual, we will break it down even further the following Friday.
Very good. George McFarland, Seven Waters Advisors. Again, how can folks get a hold of you?
903-730-6688 or 7watersadvisors.com. Like I said, if you're a CD buyer, I think that now's a great time to look into something like a MYGA, which will stretch you much further on those interest rates, which means that you'll get better performance overall from your portfolio because you have the stock market investments are not having to pull up the security or safe side of your portfolio.
Yeah, very good. George, as always, thanks, sir.
Yes, sir. God bless.
We continue on here this morning. It's our Good Morning Texas program.